Hello everyone, and welcome to the new episode of the Learn and Trade with Popeye. Today we will try to see how to use liquidity, how to map it and how to trade it, since it's a super important concept in any trading strategy. Before moving to the video, a big thanks to ZoomeX that is sponsoring us. So make sure you trade with me on ZoomeX. You can find the referral link on the description below. You will get a 20% discount and some super cool campaign we are constantly running. Also make sure to subscribe to the channel, to leave a comment and a like, so you will help me to grow the YouTube page. But without further ado, let's move to the chart. Today here is a bit windy, so apologies if you will hear some noise, but there is not much I can do living in a boat to prevent the wind from blowing. Liquidity is a super important concept. To make a very simple example, like a car need fuel to move, market or price need also liquidity to move. Without liquidity, it's very difficult to move far away, let's say from current price. And liquidity is especially a tools used for market makers to fill big orders they want to fill before moving the price to a certain direction. The concept of liquidity, it's let's say a little bit complicated, but I will try to keep it very, very simple. And consider that liquidity pools, liquidity cluster are basically orders in the order book, and this order can be both in the form of stop loss, so order triggering because the stop loss is triggered, or simply order to buy and to sell at a certain price. So market maker usually, not always, nothing is always certain in trading, tend to go to that liquidity pools because since they are market makers, big buyers, big seller, they need to fill their big orders on these pools, because only by filling their orders in their pools, in those pools, then they can move the price to the direction that they want. A misconcept of liquidity is that all the liquidity pools need to be filled. This is not true, but it's important to be aware where liquidity is in order to know what happen or what can happen in case those liquidity are visited. So do not become a liquidity maximalist that thinks that all the liquidity will be hunted, all the liquidity will be taken, and you will never take a position until this liquidity level are visited. But be aware of this liquidity in order not to become yourself the liquidity. And remember that market is fluid, so there are no 100% rules. So I'll try to show you these 4 liquidity concepts and how to use trading wise. And once again, make sure to remember that this nothing is certain, is something that can happen, but market can move also without hunting for this liquidity. As you know, market can mainly do 3 things. That is uptrend, what is happening here, it can downtrend, what is happening here, and it can range as it happen here. So in each of these scenarios, liquidity act and behave in a different way and tells you a different story. So as always, before starting to map liquidity or to start to think about liquidity, you have to understand what the market is doing and what might do next in relation to liquidity, because this will help you to understand what the market makers or what the market is doing. And always try to interpret this liquidity, market structure, trend, ranges in order to be able to tell a story of what's happening. Do not be always extremely technical. Whenever I see people that is extremely technical, I get concerned. Technical analysis is something that helps us to understand what is happening and to make educated guessing. Is not something that have to give us dogma or absolutely unbreakable rules. So here I draw these 4 charts to give you let's say 4 concepts of liquidity. This is clearly an uptrend where for a while we do have a small consolidation. And what is interesting from a liquidity perspective of this small part is what is happening here. This is what are considered, or what I call them, poor lows, that are movement of the price where we have a series of higher lows, but price is unable to move higher. In this case, on this in these poor lows, we do understand that market is more or less making a sort of triangular consolidation that we will see in the chart, but is unable to break out. What people call bear flag or bull flag or whatever, or triangles. This is showing a sort of market inability to move forward. Usually, sometimes, not always, these poor lows are taken out before for the price to move higher. Simply why? Because on this level many people are putting their stop losses. So maybe the market is very strong. It happened for Bitcoin recently, we will see in the chart, and you don't need to take out all these poor lows. But in this specific case, in the case we are discussing now, there is a build-up of liquidity, something like this, of people longing this bull flag, or call it whatever you want. And then what happened? All these people are convinced that the price will break this flag that we say that is like this. They are convinced, or they are hoping that this will break. This is unable to happen, so the flag is not broken. What happened? All these poor lows that have been built here, they are taken out. Once they are taken out, the price move in that direction. So what happened? There was not enough liquidity for the market to move. These people sacrifice their stop loss. They become the liquidity that help the price to move higher. So the first concept is poor lows, or if you invert the chart, poor highs to move the price and to continue to move the price on a certain direction. The second concept, I put it here again in a trend continuation, are equal. In this case I put equal highs, but can be the same in a downtrend, in an uptrend, sorry, something that would look something like this, to be equal lows. So what happened here, or what people call double top or double bottom, you can give anything in trading, thousands of names, but what you have to understand is the concept. So we have a downtrend, we have a tentative to break this downtrend, but price is blocked here. So people here is getting, because of this double top on, overconfident that this high or this resistance will hold. So we did have before people placing their stop loss like this to move down, or let's say they hope something like this. We have now people that see the double top and reinforce their idea that price has found a local resistance and is not moving further down. So what happened? That price go down at a certain level, could be somehow unable to move down again. Market makers come here, take out all the stop loss, and then continue to move down, because on this move down somehow there was a liquidity cluster created here that will be the fuel to move this car further down after this liquidity hunt. So poor lows, equal lows, or poor highs and equal highs are concepts that you have to understand, and then we will see some practical example on the chart. The other concept of liquidity is something that I use pretty much. You see me often posting range setup is in a range. So a range is when the price is basically going sideways. There is indecision of the market. Market makers believe that this range is a fair price, so the central part is a fair value for the price. Everybody agrees that here in the middle is a good price for that asset, at least for the time being, and everybody agrees that on the top is a premium, the price there is expensive, and on the bottom the price is cheap. So what happened? Everybody, we reach the higher part of the range, we do get a rejection because everybody shorting or selling, and everybody, every time we go to the lower part of the range, everybody is buying or short or taking profit in order, because they believe that here price is cheap, so the price is bouncing. Whenever we start to range, there is an equilibrium form here, and there is also in this case a lot of stop loss that are building in the range extreme. So in this case, a lot of guys here are shorting this. Price is unable, as you can see, to break through and to go lower. Let's say that they expect the price to go lower, price is unable to go lower, and what happened? The only way for price to go strong in the other direction is to take out all the liquidity that is built here. So whenever you will use an heat map or whenever tools you want to use to map liquidity outside of the naked chart, you will see that here there will be a lot of liquidity, the usual yellow line in the heat map, and when potentially this liquidity is taken, maybe we can have a move to the other direction. Perhaps this liquidity was not enough to break to the other direction once again, so also this liquidity of this guy that have their long position down here, let's say specular to the one of the short, also all these guys are taken out. So market maker clear the market of all their liquidity stop loss or the liquidity stop loss and is bouncing back. You have to realize that whenever the market is taking out all this position, there is two event happening. So that's why the liquidity hunt or the stop loss hunt is important. If these guys have some position, something like this guy represents two issues. One, their stop loss is an order. So whenever you trigger this, you have somebody selling, so they can buy. In this case, it's opposing because it's a short, but let's say somebody's closing a position because their stop loss is triggered, so somebody else can buy, or in this case can sell at the same price. So a big order can be filled because all this stop loss means that somebody is closing a position, and market to exist, somebody have to sell for somebody else to buy. The second point is that once you take out this setup, you take out this resistance level. Okay, so in this case it's a short, is a support, but let's say that if these positions are still in the market, what happened that when the price arrive here, they would close their position, so they would create a resistance. If we take them down here, what happened that the market makers will fill their order thanks to them closing, thanks to their support, so they can fill big order. And they remove all this taking profit that this guy has in their position, and so the price, once their order is filled, it can move strong, slicing this level because there is no resistance anymore. So it's two concepts that are happening once you take out other people's position. You take out their stop, you buy at their stop loss, and you don't have the resistance of their taking profit. The last concept is, let's say, consolidation in an uptrend. So you do have an uptrend, price is moving, let's say on high time frame, something like this, and what happened that at a certain level price is unable to move higher, so it starts to go sideways. We form little consolidation like this one, we start to go sideways. What happened in this case, this range is not really neutral because we are in an uptrend, but to move higher we have to take out some lows, so similar to this concept but more a ranging environment rather than a triangle like this or a more downtrend like this. Once this is taken out in the same concept that we have here, the price is moving higher. So it's important for you to understand in which level, in which kind of environment we are trading. Here I use this for example. There are many other concepts. Then we will see a little bit in the chart. We will move in the chart to see more. But I think this as a preliminary concept to understand and to try to note in the chart are already enough. Whenever you want to take a trade setup based on liquidity concept, make sure to do it with me on ZoomeX. You will find the referral link down below. Still for a few days we are running the super cool campaign where you get a 100% deposit cashback. Just make sure it's the first deposit you do in ZoomeX. So if you already have an account, make sure you make a second one and this is your first deposit. And what is cool is that your deposit will be matched one by one with equivalent of trading funds. So to get an example, you deposit $5,000 and you will get $5,000 as a matched funds so you will be able to trade with $10,000. Just make sure that is the first deposit, but ZoomeX is super cool because it's non-KYC, so you just need an email address to register an account or a new account. Once again, in the description below, the link for this campaign. Should you see this video when this campaign is finished, just come to my X profile. You will find my link tree, and there you will find all my referral link also for joining in ZoomeX. So make sure to trade with me and use this liquidity concept while trading in ZoomeX. I have here the Solana chart. I prepare it a little bit just to show you some of this concept, and then perhaps when we speak we can see some more. So as you can see here, in the past Solana was in a very strong uptrend. We created some poor lows down here, but they were never taken out. As I say, this is not something infallible. There is nothing that is always working 100% of the time. So you can create like a double bottom here and not visiting again for years. But here you have a clear example of the poor lows. So as you can see here, price is moving up. At a certain time is unable to move further up. It creates what it looks like a sort of triangle, something like this. And what happened? These three poor lows that were created here are hunted to move further high. Here probably we can argue that there is a temporary downtrend. You see these poor highs are hunted and then the price go further low. So let's try to see the chart more objectively. Let's say I try to make a story. Here there was a very strong uptrend. In the uptrend we didn't have much on this time frame. Is the daily of consolidation. Probably we will find small consolidation in this one, but we stick to the daily. At a certain time, price is unable to move. It creates a sort of bullish flag or whatever you want to call it. And then we leave these three poor lows behind us. Price is still unable to break through. So what happened? We get an hunt of these three poor lows and we get a rejection. How you can trade this? Simply you can see here that after this hunt, what gives you a strong conviction of a liquidity hunt like the one that is happening here is a change should produce some change on the current price action. And what is the most relevant change you want to see in price action is a break of structure. That is actually what happened here. So we get the hunt. Following the hunt, it's a break in structure. So this structure that locally was going down is broken, and here you have your sort of trigger to look for an entry. Then we can look entry in order block, demand, moving average or whatever, but here we are speaking about the liquidity hunt and how you understand if a liquidity hunt was effective if it creates a change in the market. So here is the preliminary change on the market structure break, and then you see what happened next. Now price is continuing to move higher, and at a certain level we see that something changed. What is changing here? That we continue to produce higher low, but at a certain time there is a failure to produce a further higher high, and is creating something interesting here. So market makers are unable to continue to push the price higher. And what happened? They leave behind two poor lows. Probably also these are poor highs, and these are also poor highs, and price start to go sideways. Basically started to go sideways, and you see we have a very intense hunting of poor lows and poor highs, because price, whenever you see that the price stop making higher highs and higher lows in an uptrend and vice versa in a downtrend, you understand that price is starting to go sideways. What happened in the sideways? We do have a lot of liquidity hunt. So initially we started to go sideways. We leave this low untapped, we leave these poor lows here. Suddenly the price is unable to go up and down, and what we have? This first liquidity hunt of these two here. But still price is unable to move higher, and what happened? We come down to take out all these lows we have here, except this one. It will be important for the future, and then price is moving higher. What happened after the price is moving higher? As you can see here, we break from this range, at least temporarily. So we break out of this range, we expect the uptrend to continue. At a certain time, this uptrend stops to exist, so you adapt your bias once again because the uptrend is stopping and price is finding acceptance back inside here. And what was the level that was left after this move was exactly this low here. So this low was left behind. As you see, this one has taken out all this low here but didn't take out this low here, so price is again coming down. On the way down you will see this one left behind. We come here to take out this low, not specifically all of this, as I say, it's nothing certain that all the lows will be taken. The moment this low is taken, we do get a bounce. Is a bounce in a bearish trend, correct? We are going down. So what happened in this bearish trend? We left behind these two equalize. And as I was explaining before, when we left behind this equalize, now price is again hunting this equalize, and we don't know what will happen. It might continue to downtrend, or it might find some reversal. So as you can see here, we have many of our concepts. So this is array, as we say, in the uptrend we form lows that are taken to move up. In a range, we take out lows and we form a very strong bunch of liquidity. This liquidity is taken out and the price moving the other way. Price is fractal. Even in a range, we have uptrend and downtrend, and you can see here about this equalize we formed here. So you have seen here simply in the daily chart of Solana. Then we can make many more examples. Many of these concepts we explain here. How you can then physically use this? My suggestion is to, at least when you open a naked chart, you have to try to map liquidity, not to become the liquidity yourself. So it's something that you have to use at least in confluence with your setup to make sure you don't end up liquidity. Then you can place your enter or your stop losses far away from liquidity level in order not to become once again the liquidity yourself. I just took let's say the Ethereum chart to have an example. We go always to see where there is untapped liquidity, so to map level above and below the current price. So we can see that this one is taken, so this one for us is not that relevant. Is this one taken? We can then tell a story of it in Solana. Okay, this is untapped. So we know that here there is an untapped liquidity. There is an untapped liquidity. As you can see, it came very close, so these are almost equal lows. These are the closer lower liquidity on a time frame. Here we don't care because the price already passed here, so all what happened here for us, we can tell the story, we can try to make all the fairy tale we want, but it's something that is past. So we want to see liquidity that has not been taken. What we have? We do have poor lows here. As you can see, these were never taken. And what we had? We had sort of, probably in some exchange, equalize similar to Solana, taken now, so they are not relevant anymore, but we leave them to tell a story. And what we have, we have a very big, strong liquidity cluster here. This was a range where price distributed for a while. Downtrend distribution continue to go down. It's not an accumulation because we are going down, and there is a lot of untapped liquidity just above this price. Below current price, we do have this liquidity here, and these are the level that are helping us to map something. Finally, we do have also an equalizer. So in this way, we mapped all the relevant liquidity around Ethereum here. So this is what is telling us, that above we have plenty of liquidity, this and this. Should we not short? Should we not take a short? Yes, you can, because it's not certain that this liquidity will be taken now, in 6 months, or whenever. But you should be aware, and you should be careful in case you want to short, to put your stop loss. Either you stay below because you want to be conservative, or you have to stay above because you don't know if the price will wick above. Ideally, the best place to enter would be after something like this, because in this case you know that the short market maker that want to push the price lower have taken out all this liquidity, and now you will have a much clearer invalidation, because now you don't know in case the price is going high, how high it can go. Sorry. So your stop loss is totally discretionary. It will go high like this, it will go high like this, it will go just high like this, so you don't know. If you wait and potentially see this liquidity hunt, if the liquidity hunt is happen and then you get a reaction, a market structure break, then you know that the business here is done. If your thesis is corrected and this downtrend will continue to downtrend, this downtrend that Ethereum is having is continue to downtrend, potentially here your invalidation is very clear, because you have selected a map, a liquidity level. This liquidity level is taken. Now you don't want any business, in case your thesis is correct, above this current price. What happened for the long scenario? Since price is fractal here locally, we can say that we are uptrending. So what we have here, we have very little logic to play the liquidity. So either we expect this to be a trend continuation. Trend continuation was this: price go up, exactly as I say, is unable to move further up, it start to range, and what it need to take out the liquidity to move higher. So if you want to formulate a thesis, you can see that this is uptrend. Here we are starting to range because we fail to move higher. So what market maker would need potentially, or they start to make a triangle, they form poor lows here, you want them to be taken out and move higher, or we start to range, and after this range is formed, we take out all the lows and we continue to go higher. The bias in this low time frame is bullish, so you can expect a further continuation highs. In high time frame, the bias can be bearish because we are still downtrending, so you can think about a move like this. Whatever, you know that you are in the middle of some liquidity cluster, so it's always better to wait for some liquidity to be taken. So you can also say that you don't want to form a bias here because you are conflicted within two important levels, and you want to see or a move like this, or a move like this to move here, or a move like this to go long and to move higher. In the middle here, within this liquidity cluster, you can say, okay, I'm not doing anything because I don't have interest. There is equal highs here, there is untapped lows, and there is all this liquidity here. For me, here I would become the liquidity in this game. So I think you have seen all this practical example. I explain it later. Just to sum up, to keep the video not too long, liquidity is like for the market is like the fuel in a cart. It needs to move the price, because to move the price, big whales, market maker, institution need to fulfill their orders. So without being able to fulfill their orders, is difficult, is not certain, but it's difficult for the market to move. Whenever you want to understand liquidity, you have first to understand what the market is doing. So make a bias. Are we uptrending? Are we downtrending? Are we ranging? Are we consolidating along a trend? Once you understand this, you start to map the liquidity. Liquidity can be in the form of poor lows or poor highs, can be in the form of equal highs or equal lows, untapped highs, untapped lows, or can be in the form of a range where a lot of liquidity is built on the extreme of the range before moving. So whenever you open a chart, make sure, no need to go too much back in history, to map the liquidity, the relevant liquidity close to your level. So you will understand first, in case, where to put your entry, and second, where your stop loss should be. Make sure you don't put your stop loss in a logical or well-known liquidity level, because more probably you are becoming the liquidity and your stop loss will be hunted, and the price, once have taken you out along with a lot of other people that put a stop loss in that liquidity place, will move in the direction you were thinking to move, and you will really be mad at you. I hope is clear. It summarizes everything. Remember to take any trade with me in ZoomeX. You will find the description, the link, the referral link in the description below, and to use this super cool campaign where we match 1-to-1 any of your first deposit, so you will double your trading arsenal. Make sure to leave a comment and a like and to be subscribed to the channel, and especially let me know if this video was clear, this lesson more clear. Liquidity is a tough concept, so probably I will do a second episode in the future, but just let me know if what all I explained here was clear and if you can use practically on your trading journey. It's everything for today. Stay safe out there and take care. Bye.